All right, traders, it is time to prepare to trade the best setups at the best prices. If you guys watched the live stream last night, you are well aware that I ended up swing trading those puts. SPY ended up having a small gap down, and I did end up selling those puts for a 4% win or a $2,800 profit within Trader Society when we dipped down to $414.80. From there, I told people this is reacting bullish. It's going to spike to 415.40. The 30-minute candle is bullish. I am going to be avoiding puts. And people kept on asking me about puts. And what I told them was wait until there is a 30-minute red bearish candlestick at one of our key resistance levels, whether it's 415.50, whether it's 416, 417.60, or the best one, 419.99, right? And that idea ended up working out. As soon as we formed that first bearish 30-minute red candlestick right here at $418, the SPY had a very nice drop, and we formed another nice red bearish candlestick right here, and the SPY had a nice drop. If you were to use the 30-minute confirmations, you would have done very well trading against the overall trend. So with that being said, thanks to the 30-minute chart, I ended up making a little bit over $5,000 today. And I also told people within the chat room, the best price to buy calls is at $415.50. The reason why I told them that is we had a massive breakout above $415.50, and I told them the trend's bullish, and I told them you're going to want to buy calls at $415.50, which was the exact low of the dip when it crashed from $418. With that being said, I'm going to be teaching you the strategies that we are using to make money. And I was trading against the trend today in certain situations. And I was also trading with the trend. I made a couple $1,000s buying call options. I was alerting calls at 415.70 at the lows. We had some of the best traders alerting puts there. And I'm like, what are you guys doing? And they were the ones questioning me. So I'm going to show you what it is that I saw within the market. I'm going to show you how I am not getting crushed doing put options. And let's get straight into the video. Towards the end, I'm going to prepare you to trade the best setups of prices. Fridays are known for being my best trading days. And I'm going to prepare you for the new key levels. Towards the end of this video, let's get straight into it. So I ended up making $2,800 on my swing. I was up 10% at the lows. I ended up getting out for a 4% win. With that being said, I'm going to explain to you on why I was bullish. And I told people, if you want, you could try calls, but I'm not hitting calls at this level because I don't like it. This was the level I was interested in puts in. But I was bullish and I was sitting on the sidelines because I don't want to hit it at this specific level because I didn't like the level. But let me explain to you this. So in terms of swing trading, what you guys need to understand in terms of my style for swing trading. When I'm swing trading, for the most part, unless I'm doing like a long-term expiration, but these were short-term expirations that I was doing, basically my swing trades, I scalp swing trades. So you could write that down. I scalp them. I scalp it for a gap up or gap down. That's typically what I will do. I'll be out very, very quickly. I enter my swing trade right before the market closes. I exit my swing trade right towards market open. Whether we gap up or gap down, I'm usually out right away. So SPY ended up having a gap down. I bought my puts when the price was at 415.20. We ended up gapping down to 414.67. I was up 10%. I sold for a 4% win. Why did I do that? These are the reasons why I sold. First of all, in terms of my swing trading strategy, I scalp my swing trades. I do not hold. I scalp my day trades, and I also scalp my swing trades. I do not hold. If SPY gaps down and I'm in puts, I get out. I am well aware that there is heavy support on the SPY at $414.50. If SPY gaps down and touches that support and we see consolidation, bullish pins, it's holding, consolidating, I'm out. I'm taking my profits. I get it. It wasn't a big win, but it was a $3,000 profit almost, and I locked in my gains. And another reason why I did that was it was at key support and it gapped down. So if SPY is having a small or big gap down, but especially on a small gap down, it's going to try to push to fill the gap. So I'm looking at this chart and I'm saying, okay, it's forming bullish pins at key support. It's consolidating. The price action isn't that great. It's not crashing. There's a gap to fill above at 415.20, meaning it's going to try to fill the gap. And we don't know if it's going to be bearish or bullish once it fills that gap. We have to give it some time to see how it reacts. So I'm thinking to myself, why not just lock in the profits, play it safe because it's likely going to go back to my initial entry, and then just wait and see how it reacts. So that was my mindset. And that's exactly what I ended up doing. Now, from there, I told members within the chat room I was bullish, and I'm going to explain to you on why I was bullish and why I told them when this was at $414.90, once I exited my puts, I told them this is going to spike to 415.40. Right now we are bullish, and that was 100% on point. My commentary today, for the most part, was like 80% right. I was very spot on with my commentary. But this is the reason why I told them SPY was bullish. I was looking at the 30-minute chart, and I identified that, the previous support was still a support level. You had strong support at 414.50, and it kept bottoming towards that level. It was forming higher support. And then right here, this is a bullish trend reversal candlestick at higher support. And it's going to try to retest the high of this wick. And the high of this wick was at 415.40. See how it retested the high of this wick right here. When it bottomed at the floor, it retested the high of this wick on the next 30 minute. When it bottomed at the floor, it retested the high of this wick on the 30 minute, right? That's why I kept telling them to avoid puts. If you also looked at the overall chart, if you just studied how the SPY reacted once it filled this gap, it just kept forming a floor, man. It just kept trying to form, it just kept holding support. It just kept holding support, trying to break out. Then they finally had the breakout, and it formed higher support, man. But the 30-minute chart gave it away. So then from there, I had people, asking me about puts. And what I told them is we had 3 levels, 416, 417.60, and 419.99. And what I told them is wait for one of those levels and wait for a bearish red 30-minute candlestick. Now look at this. The recommendation that I gave them, because they asked me about puts, it was a great trade. It was a great trade idea. Right here, this is the first bearish red 30-minute candlestick. When this closes bearish and you have a nice double top and it's towards 417.60, if you look at the daily chart, this was one of our key levels to short. Major resistance right here at 417.60, right? So it made sense. First red bearish candlestick, it's at one of our key resistance levels, and it's the first time testing, and it reacted as a resistance. So when you see that bearish 30-minute close like this, you hit puts at the opening of the next 30-minute candlestick because it's confirmed bearish, and it had a very nice drop. It went from 417.13 all the way to 415.70. That trade idea I gave them banked. So I started them off in perfect direction. I sold my puts at open, did the right thing. Then I told them it's bullish, it's going to spike. Then I told them wait for the first 30-minute red bearish candlestick at one of our key levels. All of that worked out, right? And I don't play all my commentary. I didn't play the call side because I didn't want the call side, but I told them this is bullish. Wait for a 30-minute red candle at one of our key levels if you want to do puts. And some other things that I mentioned is I told these people within the chat, our community, Trader Society, I told them the best level to buy call options is at $415.50, which was our previous best level to do put options and go short. Why did I flip the script and why did I tell them that? Because the SPY had a massive breakout above $415.50 all the way to $418. And I also brought awareness to this. Check out this pattern on the 30-minute chart. I told them the best level to buy calls is at 415.50 from here because it's previous resistance. Previous resistance right here, your previous roof, is at 415.50. Once it broke above the roof and formed higher support, it had a massive breakout to the next resistance at 417.60. Once it formed the first red 30-minute bearish candlestick, it had the bearish opportunity for puts. That was your confirmation to do the puts, 30-minute chart. And then your confirmation to do calls was the bear trap was created at your previous ceiling at $415.50. This is where the bear trap was created. This is where we had a massive breakout. So if SPY is going to instantly drop back to that previous resistance level, it's going to try to turn it into support. And that was the exact low and the exact bottom. And this was another reason why I was so strong and bullish at that 415.50 level was this. Take a look at this 30-minute pattern that has been occurring recently on the SPY. Look at what SPY did yesterday. It formed 2 red 30-minute candlesticks, 2 red 30-minute candlesticks. When the second closes red, what does it do? It bottoms and it spikes. And then look at what it did right here. 2 red 30-minute candlesticks. What does it do? It bottoms, then it spikes. 2 red 30 minutes. What does it do on the third candlestick? It bottoms and then it spikes. So I even brought awareness to that. I saw that this 30-minute candlestick closed red like this and it started bouncing off of 415.70. And I noticed that the major bear trap triggered at the previous resistance level. And if SPY has a massive breakout of a previous resistance, it's going to try to react to support. So I put 2 and 2 together. I said previous resistance is going to try to react to support, and I noticed a pattern recently where after SPY was done dropping for an hour straight with back-to-back 30-minute red candlesticks, it would bottom and it would start to bounce. Double red, bottom, start to bounce. Double red, bottom, start to bounce. Double red, bottom, it breaks out. That's why I was swaying against puts, and that's why I told people the best level for calls is 415.50. And I hit that. I hit that analysis, man. When we went to 415.70, I had calls. Dimitri, one of the best traders within the chat, he was in puts, and he was questioning it. Why are you in calls, man? There's resistance at 415.80. And I'm like, bro, the resistance at 415.80 doesn't matter. Look at how powerful 415.50 is. This is previous resistance reacting as a support level. It's already bounced several times slightly above that. So when it hits that best level at 415.50, when everybody thinks it's going to flip bearish because it's dropping, it's going to flip bullish. And also the double red pattern. When I saw SPY form these two red 30-minute candlesticks and we're opening up at 415.50, the best support level, I'm thinking to myself, what is it going to do? It's going to do what it did here. It's going to spike. It's that double red pattern. Do the same thing what it did right here. Two double red, it's going to spike. So that's how I trade, and that's how I come up with my overall analysis. It's within the candlesticks. It's within the chart. It's within those 30-minute candlesticks. These 30-minute candlesticks will save your life, man. We had so many professional traders who do very, very well who got hurt on put options because they're not listening and they're not using the 30-minute chart. They're buying puts at the key levels because they're great levels too short. But the problem is the 30-minute chart is green and bullish and it just keeps on trending up. There's no confirmation. If you want your puts, look, 30-minute closes red, it drops for 30 minutes. 30-minute closes red, it drops for 30 minutes. 30-minute closes red, it drops for 30 minutes. You don't need more than a 30-minute drop. That's bank. Even against the trend, that's bank. If you would have used this strategy, you'd be making very, very good money off of puts. Not saying it's the wisest thing to do to go against the trend, but it's a lot better than losing money on puts. So that's what I need you guys to understand, and that's how I pick up and capitalize on market trends, man. You need to be aware of this, man, because I'm telling you, it wasn't too long ago, just a little bit over a year ago, I would be one of those suckers who would get caught up on puts. I would give back so much profit and I would have big losses because SPY would out of nowhere have this crazy volatility and go from 410 to 420 in 2 days and catch shorts off guard because puts have been banking for a very long period of time, right? So don't be the sucker, man. Use the 30-minute chart. The 30-minute chart has saved me from getting trapped in a bull or bear trap. And that's what I need you guys focused on. I need you guys focused on reading the chart, reading the floor. This is more than key levels, man. Is it forming a bearish or a bullish confirmation at your key level? Is it forming a roof or support at your key level? If SPY creates a bear trap at a key resistance level and has a massive breakout, you better believe I'm going to show interest. If I'm seeing bullish confirmations and bullish patterns at that previous resistance, it's going to try to bottom here and spike. And it always happens when it drops the lowest, when it cracks the lowest, when it looks bearish and everyone's shorting. That's when the best bear traps occur. See how it goes a little bit lower and then it just rallies right up, man. That's how it occurs at the last minute when they least expect it. It doesn't matter if there's resistance at 416, Dimitri. There is a floor at 415.50. And that floor was a previous resistance level, and now it's a floor, and there was a major bear trap created. You got to understand the game, man. So that was my overall analysis for the day. And then from there, I just told people, just call it. Just call it for the day. There's no trade here. This is crazy. If anything, we're going to do puts at 419.99. Just call it. That was my analysis. So everything I told you, that's what I told the chat in real time today. My analysis was very, very on point. I ended up making it in total $5,000 today. And with that being said, how do we prepare to trade the best setups at the best prices heading into tomorrow? Fridays are known for being my best trading days. We are at the best fucking levels we can possibly be at. So this is my game plan, man. This is my game plan, and this is what I want you to understand. We are at one of the best levels possible in terms of initial reactions for puts. I get it. Puts have been getting screwed, but if you know what you're doing, you're not getting screwed in puts, right? And I'm not saying it's the best thing to be focused and trading on puts, but if you know what you're doing and you're using these 30-minute red candles, you're still making money on puts. It's not the best thing to do and you're not making the most money, but you're still banking based off the analysis that I'd given. But anyways, man, What I want to bring awareness to is this is one of our best levels, man, right here. This 419.99 level. Now, SPY's getting so crazy, we're even going to have to go up a little bit just in case. So these are the levels that we're watching. There's a gap at 419.99 and there's a gap at 422.28. I don't feel the need to go any higher than that in terms of tomorrow, but there is also a gap right here at 428. But I'm just going to keep the focus. We're going to keep the overall focus. We're going to mention this. So this is what I want you to understand, man. 419.23, 419.99, and 422. This is what I want you to understand. If 419.23 reacts bearish, reacts as a resistance. If 419.99 reacts bearish, reacts as a resistance, you're seeing strong roof. You're seeing bearish 30-minute red candles. I'm telling you, man, puts up and getting wrecked so bad. You really just want to focus on those 30-minute red candles rather than like a 1-minute or 5-minute chart. But focus on that 30-minute, man. It steers you in the right direction. But we're going to be looking at 419.23 and 419.99. If we get bearish confirmations at those levels, we're going to do puts. Now, in terms of the puts, right? Say this tops at 419, say this tops at 420, or it starts to crash at 419.23. How low are we going to go and where are we going to bounce? That's the question, right? So since we had a breakout, your previous resistance is right around here. It's like towards this 417.50. You can even say like 418, but it's really towards this 417.50 and 417.20. That's your zone. So that's the previous resistance that has not been tested. This is where they're going to try to bounce it. So if I were in puts and it was looking bearish and I'm in towards the 419s, I'm getting out at 417.50. I'm getting out, towards that 417.50, 417.20 range. They're going to try to bounce it towards this range. They're going to try to bounce it towards this 417.50 to 417 range, 415.70. That's a great level for calls. But they're going to try to bounce it at the previous resistance level. And then if it goes under that, then we go to 415.80. But look, man, if you're doing puts, and like I say, man, we don't aim for big targets. You can't be aiming for big targets in this type of situation, especially if you're going against the trend. But we don't aim for big targets. We just have one target. So what I'm telling you is, if we react bearish at 420 to 419, I'm doing puts, and I'm getting out at like 418, 417.50, locking in my gains, right? And then they're going to try to bounce this at 417 to 417.50. If we go below that, the next level is to try to do calls at 415.50, right? Now, in terms of upside analysis, if we somehow break above 420 and they turn it into support, we go to 422. 422 would be the next resistance level on the SPY to fill this gap at 422. If that reacts bearish, we go back to 420. If 422 reacts bullish and they break above this, my God, puts are going to get destroyed. Look at this, man. This is crazy. 422, you break above that, you turn that into a floor. There's a gap to fill at 428. And look at this. The bottom was $421. The same day it went to 427. Major bear trap. But look at this as well. There was a major bull trap crash at $420. When it topped at 420, massive sell-off to 406. So the craziest levels are going to be 420 and 422. And it is your job and responsibility as a trader to see if it's reacting bearish or bullish and use that 30-minute chart, man. If this is just trending up with green bullish 30-minute candlesticks, why are you doing puts? Look at this. Green and bullish 30-minute. Green and bullish 30-minute. Green and bullish 30-minute. Why the fuck are you doing puts? Do you like burning money? It's illegal to light money on fire, but you can do it legally. Just buy puts into a green bullish 30-minute candlestick. There you fucking go, right? Why would you want to do puts into a bullish 30-minute strong green uptrend? I laugh at these people. Don't use the 30-minute fucking chart. It's like you're trading blind, man. And I wasn't always in that position where I used the 30-minute chart. The way I figured out the 30-minute chart was I networked. I networked with someone within Trader Society. I've heard things about the 30-minute chart, but this individual was doing very, very well trading. I met with him in person, and he was teaching me some things about the 30-minute chart, and it began to click. He taught me some things. I didn't quite understand it, but I started analyzing the 30-minute chart on my own, and things started to click. I started to see patterns, right? That's the beauty of, studying and learning and connecting and networking with individuals. They can put you on to different strategies, to different concepts, man. The beauty of the 30-minute chart is it's really going to help direct you in terms of where the trend is and where the next 30 minutes of price action is going to be. The analysis was so spot on. People are getting destroyed in puts, and they're asking me, when should we do puts? I told them, I gave you the key levels. Wait for a bearish 30-minute red candlestick. If you want to go against the trend, wait for a bearish red 30-minute candle. 417.60 was one of our levels. Double top, bearish 30. Wow, a nice drop. Oh, look right here, bearish 30-minute. Wow, a nice drop, right? And you just play it off of that. You don't keep doing it. You don't say, oh, it's bearish right here, I'm going to do puts again. No, that's it. It's done. You sell, you take profits. You don't go doing it again. You do it once, right? So that's the game, man. That's what I need to put you onto. In terms of the price ladder, this is the price ladder, man. So basically, if these levels react to support, it goes up to next level. If these levels react as a resistance, it goes down to next level. The craziest levels are going to be $422. So remember, 422, this is a major bull or bear trap level. It bottomed at 422. It shot up to 428. There's a gap to fill at 428. 420, major bull or bear trap level. If 420 reacts as a resistance, we could see a very nice pullback. If it reacts to support, we go to 422. Break above 422, it goes to 428. So I just want you to understand the craziest levels to be trading at, where the major bull and bear traps are going to get created. 428, 422, and 420, 419. Those are the craziest levels. Never underestimate a confirmation. Never underestimate a support or resistance level. I don't care how high SPY goes. If there's no confirmation and it's just 30-minute green and bullish, I don't care if it's at 430. Do not do puts, man. If it's bullish and confirmed at the best resistance level possible, just let it play out. Don't do anything. Sit on the sidelines. It's overbought and overextended. Don't go buying calls even if it looks bullish. Just sit on the sidelines. Wait for a bearish confirmation. Wait for a better level to hit. Don't go blindly trading SPY at a key level. I don't care if the best level is at 430, 420, man. Look, there's people getting their faces ripped off. I gave them great analysis and I did the best I can possibly do in terms of my abilities. And I did a very good job in terms of, guidance and assistance within the analysis that I gave out and the commentary that I gave out within the chat, man. Like I said, I would normally be a little bit over a year ago, getting killed in puts and giving back a ton of gains. And the main reason why I'm not that guy anymore is because I'm trading my strategy with the 30-minute chart. This 30-minute chart is a lifesaver, man. I'm telling you, man. Every single time SPY hit one of our key resistance levels, what did I tell you? Best level for puts, 415.50. It hits our best level, red bearish 30-minute. It's confirmed bearish, opening next 30-minute. We hit puts, boom, it drops. We bank. We bank on that scalp. I get it. The overall move's bullish, but the strategy works. I get it, right? We scalp in and out quick. Right here, what is one of our levels? 417.60 was one of our levels. Bearish 30-minute, boom, it drops. Do you see how well that works? Even though we're trading against the trend and the bigger moves on calls, if you wanted to do puts and you use the 30-minute bearish, guess what? If you use that strategy, you're green. If you didn't use the strategy, you're red. So I'm going to leave it off at that. I hope this lesson helped you guys a lot. Excuse me. If you want to be a part of Trader Society and surround yourself with the right network, right team, this guy's crazy. Ninja, we had one trader in the chat, Ninja, man. So this guy, I've noticed, he's like a rarity, man. This dude has a large account. His name's Ninja within the chat room. He's a rarity. He doesn't talk a lot. He's always behind the scenes. He'll rarely alert his trades or anything. I don't think he trades a lot. But when he does, it's spot on and it's incredible and it's usually against the masses. He's the only person in the chat who swing traded calls. And he had his reasons for it. He explained why within the chat room. He explained it to everybody. I'm not going to be going over that in this video. That's private within Discord. But he swing traded calls, and he made an absolute killing on calls. Big shout out to Mo as well, man. This is truly amazing. Look at the power of the network, man. Look at what Mo ended up doing here. So Mo is one of the moderators within the chat. I want to share with you guys this because this is truly inspiring, man. Look at this, man. This is absolutely insane. So check this out. Mo ended up swing trading call options on NVIDIA. Let me show you guys this alert. So right here at 3:55 p.m. So like I said, in terms of our swing trades, we enter right before the market closes. He ended up swing trading 305 calls on NVIDIA. NVIDIA went parabolic. I think it went to like $317 or something. It went para-fucking-bolic. And we had one of the traders in the chat take that trade. This guy's been here since day one. And look at the result that he got. Look, this is 100% real. This is in TD Ameritrade, the mobile app. This is the app that I use. He ended up making a 1,700% profit return or a $62,000 profit on a single swing trade and he only had 100 contracts, but they were very, very cheap. Very, very cheap contracts. Look at this. The contracts, I believe, I think he got these for like 40 cents. I think he put in like $4,000 or something right around there, and he made $63,000. He made a 1,700% return. You can do the math, but it's crazy, man. I think he got these at around 40 cents or something. They went to 662, a $62,000 profit in one single swing trade, man. So big shout out to Fernance, and big shout out to Mo as well. With that being said, if you want to surround yourself with the right network, it's going to be the first link down below in the description. It's a one-time fee. It is lifetime access. It is Trader Society. This is the best deal ever, man. If you want to join, now's the time to join. Fridays, tomorrow, are known for being my best trading days. I will see you guys tomorrow live at Market Open. I always trade live with my team in the chat, real time. I'm always giving my analysis within real time. Like I said, everything I mentioned in this video, it was typed out within the chat. I give my analysis in 100% real time. We also do this on Live Trading Boys. We do this on live trading streams as well. Surround yourself with the right team, the right network, the right information, the right traders, the right group, and the community. And you also get access to my real-time analysis, the stock watch list, my real-time trade alerts, the course, the video lesson library. It is all included, man. If you want to join Trader Society, the time is now. I will see you guys tomorrow live towards Market Open.